Welcome to Charts This Week. My name is David Linton, I run Updata, and this week we just take a look at the same markets. I mean, stock markets have had a really violent time the last couple of weeks. Here we see that very dramatic Thursday, which was the big spike down. We had another very dramatic day on Thursday. We're down 3.5% in the US. This is the Dow chart. So, Thursday's almost like the new Friday. We get the sell-off and then a little bit of a recovery on the Friday. The week before last week, the Friday recovery was stronger. This week's recovery on Friday wasn't that strong. So, in fact, we are below the closing points of a week ago. And remember, from a technical analysis perspective, new lows are bad. So it's not looking great for stock markets, certainly. And if we look at the S&P 500 index, we had the cross on the daily cloud. We've really now got this cross coming in. This move below 1100 and staying there for the close is bad news for the S&P. New lows off the top really does suggest that we're in a downtrend phase. Now remember, the weekly chart is bullish, but we could pull all the way back to about 900 points on the S&P before we'd see that support being met. So we could have a very serious correction on the market and still then be able to recover from there. And if we look at the target very quickly on the S&P, we see here that it's just 940 is the target. So it's saying that we could easily fall perhaps another 150 points, around 15%. So quite a sell-off for the S&P 500. So looking at the FTSE, we see very much the same picture through the cloud, making lower lows this morning, Monday morning. Really not great news for the UK market either. So stock markets globally are going through a sell-off period, and it's only really just started, is what the charts are suggesting. We're in a new downtrend. And a lot of you have asked me to comment on the volatility. This is the VIX index, sometimes known as the fear factor, and we've only really been at this level of 40, the fear index, I should say. We've only been really at this level of above 40, which is where we are now, only a few times really in the last 15 years. The long-term capital management situation in 98, the 9/11 terrorist attacks in 2001, the capitulation in the market in 2002, then quite a period of low volatility, then spiked up dramatically at the end of 2008 when we had the sort of banking crisis unfolding, and then just this last week or two we've had the volatility coming right back up high again. So the fear factor in markets is pretty high, quite key. And if we look at the euro, the picture hasn't improved, even though we've bounced a little bit. The bottom line is we've tested this new low territory and gone lower than it, and it's perhaps a little bit early to say that we haven't had support here, but I think realistically this level is being taken out, and we have been at lower levels before on the euro, so we shouldn't expect necessarily that this is the low. Remember, we've got these targets of 102, 97. It's slightly academic. We're saying parity between the euro and the dollar, and a lot of people find that very hard to believe, but we have been there before. In fact, if we just look at that, we've taken out this low of 125. We're below that sort of psychological important level, which was the low last time. We're going back to lows that we've seen some years back. The euro's been there before. It isn't necessarily the case that we've made the low, especially as we've just made a new low. It suggests there's probably further to fall still. And if we look at the sterling chart, much the same picture as last week, where it's lower lows, no signs yet of recovery. We need to get back above this 150 level on the cloud to be confident that sterling was going through a reverse against the dollar. But against the euro, we have talked about this breakout. Sterling is looking like the stronger currency, and 130 is currently our target. And if we look at the point and figure targets, we've got 130 and 142, but 130 is the near side target at the moment for euro against sterling. If we look at oil, The oil chart really isn't looking great at all now. Last week we said in our report that went out to clients that we felt that the uptrend in oil was now over. This is the daily chart. We've had a really good run since we had the cloud cross in oil over a year ago now. We see we had this dramatic sell at the top, buy at the bottom when we crossed the cloud. It was quite a rapid rise, and then it's been running out of steam really for the last several months. But we're now below this cloud. We'd expect to come somewhere back to the lows on oil, and really the key thing with that is to look at the point and figure targets. And what we are seeing is this downside target. Remember, this is uninterrupted selling from 86 all the way to the high 60s, about 68, 69. That whole sell-off occurred, this is a $0.50 chart, without a reversal of $1.50 at any time. So it's uninterrupted selling thrust. If we make a lower low, if we close below this sort of 68 level on oil, 67.5, we close at that sort of territory, we're activating this downside target of 33.50, which is around the previous low. So it looks like we could go back to the base level on oil. Quite a turnaround there. The 60-minute chart is your shorter term roadmap. It was bearish, bearish, bearish. We're now range trading. Remember, the clouds are not so good in the sideways moves, lower lows, and we'd be back below the cloud. We might see a little bit of a short term recovery in oil, but really the longer term picture now, the medium term picture of weeks, months, days, weeks and months ahead, it's looking like we're going to see pressure back to $60, back to the 50s, and could even go back to the previous low. It will take time, of course. This is a 1 minute chart. Remember, these are out of date almost by the time you're looking at them. They're changing in real time. We do have an upside target of 71.75 on the WTI front month contract, but we are seeing some short term new targets coming in. This is the range, the congestion range. We break below here, but there's not many targets to speak of, but of course the targets will emerge as we start to see short term selling thrusts. This is a 1 minute chart. And if we look at gas, nat gas has held up. It's had a bit of a pullback last week, but it still is basing and holding up. And if we look at the correlation between oil and gas, it at the moment it's still it's negative. It's not completely negatively correlated as it was a few weeks ago, but gas and oil are doing different things at the moment, and the correlation isn't there. It was strongly there in February, where you could actually see the two correlated. The correlation is changing all the time. There are times to look at certain things on your screens, and there are times not to, and that's the importance of understanding the correlation curve and where you are on that. And if we look at gas in the UK market, this is NBP, the winter contract, winter 10. We've had a little bit of a revival here in gas, so we are seeing UK gas prices starting to recover. We're through the cloud again, so it's starting to look a bit bullish short term. And in fact, last week we had targets up to 43.20 on gas, so we are seeing 41. That these targets are up, and the trend is up short term, so possibly a good week ahead in the gas market. And in fact, a few of you have asked me to comment on the curves. This is pretty well all products, and if we look at the prompt market, most contracts up this morning. The months, again, the front months are mostly up, not much activity towards the end of the curve as you'd expect. Not many of you look at the quarters, but the winter summer season contracts are all up again this morning. So across the gambit of gas products, it's looking pretty good this week. European power, there's German power. Here we see we crossed the cloud. We've had a dramatic move up. We're testing the cloud again. So it's a counter trend move, really. You'd expect power to be a bit bearish. So we'd need to be careful. On Friday, we did see this thrust target of 52.75 given on Friday morning, and Friday around lunchtime. This is again a 1 minute chart, and it's this morning these green crosses show how we've just moved straight to that target. I know a lot of you are looking at these power targets and trading with them. Absolutely vital that you keep a close eye on these if you are trading in European power market. That's it for this week. Until next week, happy charting. See you then.